You know, Adobe is a software giant that literally defined the creative industry for decades. But what happens when the very technology it's supposed to be embracing, AI, might also be the thing that brings it to its knees? Today, we're digging into whether Adobe is gearing up for a massive AI-powered comeback or if it's just walking straight into a classic value trap.
I mean, just look at the stock. It's been absolutely hammered, down over 46% from its peak, and that has Wall Street completely divided. Is this a company in a death spiral, or is this one of those historic, once-in-a-generation buying opportunities? Let's try to unpack the really powerful forces pulling this stock in completely opposite directions.
Okay, so the heart of all this anxiety has this really dramatic name, the SaaS apocalypse. And here's the idea behind it. Imagine a world where AI is so good, so advanced, that it doesn't just help you be creative, it could potentially replace the need for those specialized creative skills entirely. Now, that is the absolute nightmare scenario for a company like Adobe, because the value of its tools, its entire subscription empire, could just evaporate. This is the fear that it's absolutely crushing the stock right now.
So why exactly are investors so scared? All right, let's dive into the bear case and see what they're seeing.
This chart, well, it tells a pretty painful story, doesn't it? From that incredible peak near $700 back in 2021, the stock has basically been in a freefall. And why did it get so much worse recently? Well, it's because this chorus of doubt on Wall Street got louder and louder, questioning if Adobe can really survive this AI onslaught. And that all led to this brutal, multi-year low just a few weeks ago.
And you know, as if all that market chaos wasn't enough, Adobe is staring down a huge leadership question mark. The CEO, who steered the ship for 18 years, right through its biggest growth phase, is stepping down. That leaves a massive question mark about who's in charge, and it's happening at just about the worst possible time.
And look, this isn't just fear and speculation. The damage is actually starting to show up in the company's numbers. You got AI literally eating into some of Adobe's older business lines. They missed a key growth metric that analysts watch like a hawk. And then, to top it all off, a hefty $150 million fine from regulators cast this ugly shadow over the company.
But that is just one side of the coin. So now, let's flip it over and look at some really powerful evidence that suggests Adobe isn't a victim here at all. In fact, it might be positioning itself to be a huge AI champion.
So what's the biggest signal that things might be okay? Well, it's coming from inside the company itself, from Adobe's own management. They have authorized a staggering $25 billion share buyback. That is a massive, incredibly confident bet that they believe the market has gotten this whole story completely wrong.
See, Adobe's counterattack isn't just to make a better image generator. They're going after something way more ambitious called Agentic AI. Now think of it less like a tool and more like an AI coworker. You don't just ask it to make me an image. You give it a big goal, like, hey, launch our summer social media campaign. And the AI plans a strategy, creates all the posts and videos, schedules everything, and even analyzes the results. It doesn't just follow a command. It thinks, it reasons, it executes. And hey, don't just take Adobe's word for it. The CEO of NVIDIA, the company that's literally powering this entire AI revolution, he's calling Adobe's strategy the future of the marketing manufacturing system. That is a huge vote of confidence coming right from the heart of the AI world. Okay, so what do the actual numbers say about all this? Let's take a look under the hood, because while the stock price is screaming fear, the company's financials, well, they tell a very, very different story.
So, despite all that doom and gloom you see in the stock chart, Adobe is financially on fire. Their latest quarterly results didn't just meet what Wall Street expected. They blew right past them. We're talking revenue up 12%, earnings per share surging over 19%, and a record-breaking amount of cash flowing into the business. And this chart right here, this shows you where Adobe is just in a league of its own. Its profitability is incredible. A gross margin of almost 90%. It's basically a money printing machine. Think about it. For every single dollar in sales that comes in, they keep nearly 90 cents as gross profit. Most companies can only dream of that kind of efficiency.
So what's the crucial takeaway here? Well, it kind of boils down to this one number, a return on equity of over 62%. That is an absolutely elite figure. It proves that Adobe's business model isn't just powerful, it is incredibly efficient at turning its shareholders' money into real profit. And all of this creates these massive paradox, right? Adobe's financial performance is absolutely world-class, but its stock is trading at these bargain basement prices. We're talking about a forward PE ratio that is just a tiny fraction of what it's been over the last 5 years. The disconnect here is just huge.
Okay, so with this huge conflict between the scary story and the amazing numbers, how do you even approach this? Well, the experts have actually laid out a pretty clear strategy, and it's all about watching specific price levels.
So here's the playbook analysts are looking at. Step 1 is to get in right around these current levels, where that massive $25 billion buyback could act as a safety net. Then you maybe accumulate a little more if it dips. The first profit target is set up near that key 200-day moving average. And this is critical. There's a strict stop loss in place, just in case the bears turn out to be right after all.
So what's the bottom line here? What you should really take away is that this is a clear battle between a scary story and some seriously solid numbers. On one side, you have this crippling fear of AI disruption. But on the other, you've got a cash-rich company with elite financials, a bold new AI strategy, and a management team that's betting billions that the market is wrong. The pros are calling this a classic case of a stock being mispriced.
And really, that leaves us with the multi-billion-dollar question, doesn't it? Is this a company on the verge of collapsing, or is it about to become the AI comeback story of the year? The analysts think the stock is mispriced. The real question is, will you see that opportunity before everybody else does?